Hey everyone, welcome back. Ready for another deep dive? Today we're tackling notes from my trading diary.
Oh, this is a good one. This book by Mansi, it's packed with insights. I think our
Mhm.
listeners are really going to get a lot out of this one, yeah.
For sure. We're going to unpack some key ideas about stock trading, how to manage risk,
hmm
and that whole psychology of the market thing. Whether you're already trading or just kind of curious about the stock market, I think there's going to be something in here for you.
Yeah, absolutely. You know what I found really interesting about this book? Mansi, she uses all these real-world examples.
Oh, yeah.
Makes these financial ideas, they can be kind of abstract sometimes.
Right.
She makes them much easier to grasp.
Mm. Yeah, totally. So let's jump right in. One of the first things that jumped out at me was this idea of like discipline and risk management going hand in hand.
Okay. Yeah.
She's got this scenario, right? Two traders, same strategy,
Mm,
but totally different outcomes. One's got a strict stop loss at 2%, profit target at 4%.
yeah.
The other one's just trading based on gut feeling.
Oh, risky.
Super risky. So the stock drops 5%. The disciplined trader, their loss is capped. Exactly. The other one, though, full 5% hit. It just shows, right? Even with a good strategy, if you don't have that discipline,
Yeah, you're going to get burned.
you're going to get burned. And it brings up this other point she makes. Recovering from losses is way harder than it
Oh,
seems.
absolutely. Like if you lose 50%,
You need to make a 100% gain just to get back to even.
exactly. So yeah, limiting those big drops, that's huge.
Huge. And then she talks about this thing about adapting your risk as your capital changes. It's like
Mm.
when you're starting out, you can be a little more,
Aggressive.
yeah, take some calculated risks with smaller amounts to try to grow it faster.
Right. But then once you've got, a decent amount built up,
Your focus shifts.
yeah, preservation,
Yeah.
lower risk strategies.
It's like she gives this example of like Shiv starting with 100 rupees, going for a high risk business for 50% returns
Right.
versus someone who's already well off, maybe going for bonds or real estate. Different stages, different game plan.
Makes sense. Adapt as you go.
This next point, big one. It's about when hope clashes with chart patterns.
Ooh, interesting.
Mansi's point is chart patterns are usually a better guide than just hoping things will turn around.
Yeah, because those patterns, they're showing you history, right?
Exactly. Like past performance isn't a guarantee, but
It gives you some idea of how things might play out.
right. And she gives this example. Ginny's hoping for a reversal in this downtrend, but there's no real evidence for it.
Whoa.
Rinny and Saloni, they're following the chart patterns. Much better outcome. It's about looking at the data objectively, not just letting your wishes cloud your judgment.
So it's about being realistic.
Mm.
And this actually ties into the whole concept of technical analysis, right?
Yes.
Using historical data, trying to spot those patterns. It's like using a compass based on where you've been before.
Love that analogy. So if you're seeing a stock price go up every time it crosses above its 50-day moving average,
Okay.
might be a bullish signal, but,
Doesn't mean it's a sure thing.
right. It's just one piece of the puzzle. Technical analysis, it's a tool. It's not magic.
Yeah, and it can be wrong sometimes, like a weather forecast.
Totally. She's also got this interesting point about consistent effort. She calls it the 18-minute daily practice hack. Basically, if you dedicate just 18 minutes a day to learning something new,
Okay.
you're going to be ahead of most people in a year. Like, imagine just spending a little time each day learning about the market. Adds up, right?
Oh, absolutely. And this goes hand in hand with trading, too. It's about the consistent learning,
Yeah.
analyzing, being disciplined.
Yeah. Building experience over time.
And she says it perfectly. You can't buy experience, you got to earn it.
So true. One thing she really stresses is patience.
Ah, yes. In trading,
Trading, it's not about getting rich quick.
definitely not.
People who make impulsive decisions based on, like the market going up or down for a day or two.
Yeah, they usually end up losing.
Exactly. You got to have a plan and stick to it, even when things get a little rocky.
It's about waiting for the right opportunity, not just jumping into every trade.
She even says that successful trading is like 90% waiting.
Wow, 90%. That's a lot of waiting.
It's about being patient, doing your research, and then when the right time comes,
You got to be ready to act.
and that's where it's so important to listen to the market signals. What's actually happening, not just what you're hoping will happen.
So it's about reacting, being flexible, not just predicting.
Exactly. She gives this great example of selling a stock before it tanked, just based on like the performance and the news around it.
Smart move. Paying attention paid off.
But, she's also very real about the fact that there's always going to be an element of
Randomness.
randomness. Exactly. You can do all the research in the world.
But sometimes stuff just happens.
Right. And that's why risk management is so crucial.
Things like stop-loss orders.
Exactly. They protect you from those unexpected, like, black swan events. She even has this funny thing about just going to the movies on budget day.
What? Really?
Yeah, a zero-loss strategy. Tune out all the noise, the market's reaction to the budget announcement.
Makes sense. Sometimes the best move is not making a move.
Exactly. But, one of the biggest takeaways from her diary is the importance of...
Mastering your emotion.
Yes, she's got this great quote, "Make a plan, then become a robot. No emotions, only execution."
Wow. Powerful stuff. So it's about taking your feelings out of the equation.
As much as possible, yeah. Fear and greed can really mess you up when you're trading.
Yeah, I could see that.
Stop-loss orders, exit strategies, these are all ways to help you stick to your plan even when things get intense.
So detaching a bit, being disciplined.
Exactly. She talks about how learning to control her emotions was a game changer for her.
It makes sense.
Yeah.
If you're panicking or getting greedy, you're not going to make good decisions.
Exactly. So to wrap up our deep dive into Mansi's insights, what do you think are the key takeaways here?
Well, first and foremost, discipline and risk management are absolutely non-negotiable.
Agreed.
And understanding the psychology of the market, recognizing those patterns,
Huge.
knowing when to wait, when to act,
Yeah.
having a well-defined strategy and sticking to it, even when it's tough.
Doesn't put it better myself.
Yeah.
It's fascinating, though, how these principles apply to so much more than just trading.
Oh, yeah, absolutely. It's about being disciplined, managing risk, making informed decisions, controlling your emotions.
Exactly. That applies to pretty much every area of life. So, for everyone listening, here's a little something to think about. How can you use these lessons from Mansi's diary in other areas of your life?
Good question.
What are those market signals you might be missing in your own personal endeavors? That's something to ponder, right?
Definitely food for thought.
Thanks for joining us for this deep dive. Until next time.
See you then.